Thank God it's Friday. It's the last edition for the week. Good morning and welcome to Business Morning. I'm Ladi Williams.
Good morning. I'm Ini John Mekwa. Welcome to the show, where we start with some update on business news this morning. OPEC Plus delayed its ministerial meeting until today to hold more talks on oil output policy after the United Arab Emirates blocked a plan for an immediate easing of cuts and the extension to the end of 2022. OPEC Plus sources earlier said that the plan on which top OPEC Plus producers, Saudi Arabia and Russia, had reached a preliminary agreement would see output rise by 0.4 million barrels per day a month from August to December 2021 to meet rising global demand.
Meanwhile, the group forecasts that in 2021, global economy is to grow by 5.5% with an accelerated rate of growth foreseen in the second half of the year. China and the U.S. continue to fuel the growth prospects from the year, with China's economy on course to expand by 8.5% and the U.S. by 6.4%. India's economy is still expected to grow by a remarkable 9.5% growth in the Eurozone this year. It is also forecast at 4.1%.
Oil demand is forecast to grow by 6 million barrels per day to around 96.6 million barrels per day on average for the year. Similar to the economy, growth in the second half of the year is expected to gain momentum, potentially surpassing 99 million barrels per day in the fourth quarter. Overall, demand in countries outside the OECD should rise by nearly 6.8% this year and by almost 6.3% in the OECD.
Looking at the supply side, OPEC projects non-OPEC supply to grow by an estimated 0.8 million barrels per day in 2021 for an average of 63.7 million barrels per day. The main drivers for 2021 supply growth are anticipated to be Canada, Brazil, China, and Norway, while U.S. liquid supply is now expected to only grow by a marginal 0.03 million barrels per day year on year. U.S. crude oil is actually forecast to decline year on year by 0.1 million barrels per day to 11.2 million barrels per day.
And following this, oil prices held steady today after OPEC Plus ministers delayed a meeting on output policy as the United Arab Emirates backed out a plan to add 2 million barrels per day in the second half of the year. U.S. West Texas Intermediate crude futures were up 5 cents to $75.28 a barrel, having jumped 2.4% yesterday to close at their highest since October 2018. Brent crude futures inched up 4 cents to $75.88 a barrel after rising 1.6% yesterday. Both benchmark contracts posted strong gains on Thursday as a plan backed by OPEC Plus to add 400,000 barrels per day each month from August through December 2021 was more cautious than investors had expected. Prices retreated after the plan met resistance from the UAE, and OPEC Plus postponed a ministerial meeting till today.
And yesterday was also a busy day in the oil and gas industry in Nigeria because after more than 12 years of legislative deliberations, media and campaigns, and protests by civil rights groups, the National Assembly finally passed the Petroleum Industry Bill. The PIB seeks, among other things, to promote transparency, good governance, and accountability in the administration of petroleum resources in Nigeria. Although the bill scaled through at the House of Representatives without hiccups, it is, however, a different situation at the Senate. Our correspondent, Emperor Simon, reports.
Presented to the National Assembly for the first time in 2008, the Petroleum Industry Bill is on the floor of the Green Chamber, this time for consideration. The chairman of the Ad hoc Committee on PIB, Mr. Mohammed Mongano, makes an amendment to the clause for host communities. The rest of the consideration process is straightforward and the bill is passed.
Thank you.
Speaker of the House of Representatives applauds the passage of the PIB, assuring that similar attention would be given to the Electoral Amendment Bill.
In the next couple of weeks, we're going on our summer vacation. Even with this pace of landmark legislation, we're going out on a high.
In the Senate, the report on the bill is also under consideration after it was presented by the Joint Committee on Petroleum Downstream, Petroleum Upstream and Gas.
Let's be fair now.
The report recommends amendments to a total of 752 provisions, out of which about 56 are substantial amendments. It also recommends the unbundling of the Nigerian National Petroleum Corporation from being a regulatory body to a limited liability company in which members of the public can hold shares, funding mechanism of 30% of NNPC Limited's profits to fund exploration of frontier basins across the country, and 5% of the actual annual operating expenditure of the preceding financial year in the upstream petroleum operations affecting the host communities for funding of the Host Communities Trust Fund.
Mr. President.
But the Deputy Senate President, Senator Ove Omoagege, has some reservations.
Mr. President, we don't want this money invested in midstream gas infrastructure. This is a penalty. There's a reason these companies are being penalized. This gas flaring is making people sick. It is damaging the environment. The remediation we seek is not construction of pipelines. It's not construction of gas infrastructure. We want that money to be used to ameliorate the condition.
Then the Minister of State for Petroleum Resources, Chief Timipre Silva, and the Group Managing Director of the NNPC, Mr. Mele Kyari, are invited for a closed-door meeting. Moments later, the consideration of the bill resumes, with the President of the Senate putting each clause of the bill to vote.
So those in favor that clauses 1, 2, 3, and 4 stand part of this bill, say aye. Those against, say nay. The ayes have it.
But a lawmaker from the Niger Delta region raises concern over a clause.
We are talking about 5%. The 5% is not too much.
The matter is put to vote.
Those in favor of the amendment being sought by the DSP, say aye. Those against, say nay. The nays have it.
And the outcome is still not favorable for the lawmakers from the Niger Delta region, and a call is made to divide the Senate.
Mr. President,
It doesn't matter.
I am calling that
Let
the procedure for a division be taken and let's have a division.
The matter is eventually resolved, and the PIB is passed with the provision of 3% for host communities.
Those against, say nay. The ayes have it. Clerk of the Senate.
While the passage of the PIB is considered a major breakthrough by the Ninth Assembly, Nigerians await what percentage would be eventually transmitted to the President as provision for host communities. 3% as passed by the Senate or 5% as passed by the House of Representatives. Emperor Simon, Channels Television News.
Great news there for the industry, but let's take a closer look at the bill and how it should work. And we have Mr. Adewale Ajayi, partner and head tax, energy and natural resources and managed services in KPMG in Nigeria to discuss that with us. Good morning, Mr. Ajayi, and thank you for joining us.
Good morning. I'm happy to be here.
So first of all, let me just ask, I mean, we've been on this for a very long time, since 2008. Did you expect that it to be passed yesterday?
Well, if you follow the commitment of the National Assembly, I wasn't really surprised because all along they have demonstrated their commitment to passing the PIB. And I remember during one of those public hearings when they said it would be passed by June, we were all like, okay, let's wait and see. I guess it was coming in from the experience we've had since 2000, and then 2009 when the first PIB, was presented before the National Assembly. So I'd say kudos to the National Assembly. So I wasn't really surprised that they eventually got it passed. Of course, they still have to harmonize based on the reporting that your reporter has just given. Still have to harmonize the rate for the host community trust fund.
Yeah, so two issues have kind of delayed the passage of the PIB with respect to the fiscal provision and the host communities, like we had there. One of the houses is asking for 5%, and the other one is asking for 3%. So these are some of the issues. How has the PIB, now that has been passed, how has it resolved these issues? And how do you think we'll move forward with these two figures standing out for the host communities?
Okay, thank you for that. Let me start with the fiscal provisions. I think one of the biggest challenges that we face in the NF versions of the PIB, right, like you rightly noted, has always been the issue of fiscal provisions. And it's because people felt that the provisions we currently have, they're not competitive enough, they they're not fair, they're not equitable, and not sufficient, to attract investment. When you look at the very first version of the 2020 PIB, that 2021 that was presented, there's still a lot of issues that the stakeholders were looking at, the fiscal provision. But when you look at the one that was passed by both the House and the National Assembly and the Senate, yesterday and the day before yesterday, what you find out is that they made significant concessions. Number one, the hydrocarbon rates have been drastically reduced. The very first version that we had before now was talking about as high as 2.5%, and now that rate has been reduced to 32%. The same thing goes for reality. The rates have also been significantly reduced. And I think one of the biggest challenges that the stakeholders have concern about is the cost price ratio limit, right, which was pegged at 65%. Even though the version that has been passed by both the Senate and the House, it talks about 65%. But what they've done is that they've decided to exclude certain big ticket items like royalties, like rents that are payable on leases, and of course like contributions to funds like the host community fund, like the NDDC. So those ones have been excluded, and of course they also have excluded funds for the remediation fund. So that will reduce the amounts of the minimum tax that will be paid if that reduction had not been made. So in a way they've done that. And the other thing I was quickly say has to do with the relinquishment. Before, what we believed was that 40% of the existing acreages must be given up. But now, you can actually give up more than 40%, provided that you have your pursuits that meet certain criteria in terms of the areas that are producing, in terms of areas that have been appraised or where there is some discovery. So there have been some concessions in the fiscal provisions. So I think based on what we have now, we should be able to attract investment. All those investments that have been stopped because of uncompetitive fiscal provisions, I think we should be able to bring them on board. With respect to the host community, I think the issue is a bit different. When you consider the fact that currently the host community enjoys still the NDDC contribution of 3% of OPEC that oil producing companies pay, you still have the Ministry of Niger Delta that is responsible for the development of that area. And of course, there is 30% derivation formula that that the host communities are entitled to also based on the resources coming from the area. And of course, you then have a memorandum of understanding that provides facilities to the host communities. So when you look at the issue now, whether it should be 3%, 5%, 10%, initially the representatives of the host community were arguing for 10%. But when you look at the amount of funds that is dedicated, to the host community, I think the best way to start would be either the 3% that has been proposed, because again, this is cost. Because we have to also remember that that the oil producing companies still continue to contribute to NEDC, right? And so that would increase the cost. Because one of the issues that we don't want to do, right, is to expand the list of taxes and levies that are payable by the oil communities, by the oil producing countries. So I think at the end of the day, we'll resolve the issue of 3 to 5%, right? But I think what we have, right, will sufficiently address the concerns and the challenges that are faced by all stakeholders.
Okay, well, but based on the existing laws, nothing, stops an entity from operating in more than one sector. For example, the upstream, midstream, or downstream sectors. But, with the introduction of the PIB, a company shall not be involved in more than one stream of petroleum operation. And would have to, register separate companies for each stream of petroleum operation. Does this not complicate things for investors who, have large capital to invest in different sectors?
You're right. That is one area of concern that stakeholders felt that they will have addressed, because we have companies today that carry out integrated operations. They are involved in both upstream and midstream. And now all of a sudden, what the PIB have said is that you need to have separate companies, for that purpose, right? But in the version that was passed yesterday and the day before yesterday by both the National Assembly, one concession they've given is that segregation will be tax neutral. In other words, the operators will not need to pay, capital gains tax or pay stamp duties. So that is one concession that they've given. I think what is underlining the demand for segregation is just the need to ensure that there is transparency. But at the end of the day, you have to go back to the economics on which a particular business, was actually started in the first place. Because they would have, started that particular business on the basis that it would be integrated. Now all of a a sudden, to separate, those projects. So it's going to affect the project economics. But even where we are, I mean, it's obvious that the government has decided that the way to go is to segregate, right? And I think, we will have to go with that and see how we can manage or minimize the implications or the damage, to existing projects.
All right, so do you think with this passage now that it will transform the NNPC into an efficient and profitable company comparable to other national oil companies?
Well, it doesn't automatically translate. When you look at the objectives that are driving the incorporation of NNPC, the whole idea is that NNPC should be self-funded. Remember that one of the issues that we've had in the oil and gas industry has been the lack of finance or funding for JV operations, and NNPC has been the biggest culprit for that. So what we expect is that with the incorporation of NNPC under the CAMA, right, we expect NNPC to be self-funding, and so they'll be able to raise capital, right, to be able to execute the projects they have in mind. But at the end of the day, it all boils down to the commitment, it boils down to the will of the people at the helms of affairs of NNPC. And this is where everybody needs to pay attention to. Though on paper, NNPC should be profitable, but again, it all depends on how it is executed at the end of the day. We have the will to be able to transform NNPC to a company like that, Saudi Aramco or Petronas. That's really the question that is out there.
All right, but in your view, what is the unfinished business in this PIB for 2021?
Okay, if you remember when we passed the governor's bill in 2018, right? So after the PIB set up and broken down into 4 elements, we then decided to pass the governor's bill, right? And the president, decided not to assent to it. And one of the issues, of course, was a perceived erosion of presidential powers or ministerial powers, as the case may be. Now, when you look closely at the PIB, what you find out is that the Minister of Petroleum will continue to exercise significant influence, over what happens in the oil and gas industry. Take, for example, one of the provisions requires a commission, right, to recommend the award of license, to the minister. And the minister can then decide, not to approve, right? If it doesn't approve, it must give reasons, right? And if it doesn't approve within the stipulated period, then the award is deemed to have been given. But how do you deal with the situation where the same minister is the president, of the country that has the powers to nominate, and to remove, the members of the commission? So that is still an area. How do you deal with that influence that the president may exercise? And I think the other issue also has to do with the regulation, price regulation. We're still going to have regulation of prices, for gas price. And this is not surprising, given the fact that, power has not been regulated. So I can understand maybe in the interim, right, we go with regulation, but at the end of the day, we have to regulate. But that's really the way, to go. And of course, the other thing, that we need to talk about is, there's some issues, some, inconsistencies with respect to when royalties should pay. In one vein, some sections say it starts with 1 month after production, and another one it says 2 months after production. But I think, given what we have, something that can be resolved through the annual finance bill. But I think we've come a long way, given the fact that it's taken us 20 years to be where we are. But I would say it is not yet to be.
Obviously, this is an ongoing discussion because when we even come to the implementation of it, taking it away from the document to the reality, that's also another aspect. But we really have to take a pause here. Thank you so much, Mr. Adewale Ajayi, Partner, Head Tax, Energy and Natural Resources, KPMG Nigeria, for sharing your thoughts on the passage of the PIB with us this morning. Do enjoy the rest of your day.
Well, thank you so much.
So we'll take a break now. When we return, we'll see how the markets fared in the first half of 2021 and the outlook for the next 6 months. Do stay with us. It's Business Morning on Channels Television.
Welcome back. Still watching Business Morning. As we step into the second half of 2021, let's look back at the last 6 months in the markets, the equities and fixed income markets. Yields in the fixed income have recorded a downturn, and in the equities market, we have the first trading session ended flat. Well, we have, let's bring in Omotola Abimbola now, investment analyst with Chapel Hill Denham, have this conversation. Thank you for joining us. Good morning.
Good morning. My pleasure.
Yeah, so looking through, events in the Nigerian economy during the first half, what has been, it has been an eventful 2021. How would you describe the performance of the Nigerian economy during this period?
Thank you very much for the question. I'm glad to be here. So for the performance of the Nigerian economy, I would describe it to be very challenging, but at the same time, very resilient. Challenging in the sense that we are living through a global pandemic, which has, had a very negative impact on economic activities across the globe, including Nigeria, and also impacted on macroeconomic stability. And of course, the major antidote to that health pandemic is effective public vaccination of the population. And in this regard, Nigeria is lagging, behind. Till now, less than 1%, of the population of the country has been vaccinated. And that pales in comparison when you compare it to much more advanced economies, where you have, in some cases, about 50% of the population already vaccinated. So it's still a very, very challenging period that we are living in. But be that as it may, it's also been a very resilient, economy thus far in the year. If you look at economic activities, for instance, we have seen a very sensible pickup in economic activities in Q4 2020 when we had a nascent recovery in the economy, with just about 0.1%. By the time we entered Q1 2021, we are seeing a consolidation of that growth momentum, back up to about 0.5%. And our estimates for the Q2 2021 period.
All right, looks like we're having a glitch there. Well, he was making a point there about how the economy has fared in the first half.
Yes, and the markets, I think, from what we've been hearing from analysts, actually, especially the fixed income market needs, like a boost.
It needs
because
a jolt
yields,
right now.
because the yields have not been going up in the last
Not
few
been
days.
attractive at all in that market.
And so activities have really been in the lull for some time now. So we're hoping that as we go into the second half of the year, that we would actually get that and get some things.
I think we have. I think we have him
back now. Are you back, Abimbola? Can you hear us?
Yes, I can hear you very clearly.
Okay, all right. So could you finish up your thoughts as you were saying?
Okay, so I was saying that it was a very challenging period in the first half of the year, rather, due to the COVID-19 pandemic that is still having a negative impact on the economy, as well as on macroeconomic stability. But it's also been a very, very resilient, economic performance, given that we saw a consolidation of the growth recovery in the first quarter of the year, and based on, the leading economic variables, we're likely going to have another impressive performance in the second quarter of the year. And beyond that as well, we saw headline inflation rates pick up, in the first quarter of the year and even into the early part of the second quarter. But thankfully, we are now seeing, a very mild disinflationary momentum, which is now garnering speed, to the extent that we saw headline inflation rates, decline below 18%, in May. So there are reasons to be optimistic, definitely. But one could say that we've had a very challenging, also very resilient performance in the first half of the year.
All right, but let's look at the outlook. Now, how do you expect the economy to perform in the second half?
So I think there are reasons to be optimistic. By and large, I do believe that we've probably seen the worst of the pandemic for now. And the outlook, going forward in the second half of the year is optimistic to an extent. For the economy itself, we should expect to see, economic activities quicken due to three major factors. The first one is that we have seen restrictions on, related restrictions being relaxed, all across the globe, including Nigeria as well. We are also going to see the impact of group-based effects reflect positively on the economic growth numbers for Q3 and Q4 2021. And lastly, we're also seeing a very strong recovery in the crude oil market. So as we all know, even though the oil and gas sector contributes, less than 10% to economic activities, it's a major contributor to both fiscal revenues and foreign exchange earnings. And last year, due to the COVID-19 pandemic, we had, oil prices, sink significantly, to average less than $50 per barrel. But this year, thankfully, we are seeing, the Brent, crude oil futures trading above $20 per barrel. And the outlook is that we're going to see, oil prices trading, above its 2-year high in the second half of 2021. And this speaks to oil production as well. Last year, due to the OPEC Plus production cost agreement, oil production sank significantly. In the second quarter of this year, OPEC Plus started to raise the oil production limits for its members. And we think that in the second half of this year, we're going to see further lifting of the oil production cap. So that should be very favorable for the economy as well. So I mean, but by and large, we think that in terms of the economic activities, we should see an improvement. In terms of the inflation rate as well, we should expect to see an improvement as well, partly due to base effect. But I mean, the outlook is that by the end of this year, we should see headline inflation rates trend lower from close to 18% that we have currently, about 16% by the end of this year.
Okay, so let's look at the equities now. We saw the release of corporate earnings, and it was like a lot of investors did not react so much to it. So I'd like to get your observation on that and your expectation on the next season of earnings.
So for the equities market, like you did mention, we've had very, very solid and resilient corporate fundamentals in terms of earnings results. I mean, if you look at the key sectors of the equity market, for instance, that includes consumer goods, industrials, especially the cement producers, as well as even banks. They all declared very, very resilient, Q1 2021 performance in their earnings reports. In fact, cement producers, for instance, were growing revenue has double digits, and at some point they even maxed out of their capacity. So definitely, corporate fundamentals have been very, very strong. But the major drag to the equity market performance is what I would describe as sentiment, and also the inability of foreign portfolio investors to actually bring in, additional inflows to the equity market. So due to the fact that we still have a number of, FX challenges in the economy, particularly lack of liquidity in the foreign exchange markets, that has discouraged a number of foreign portfolio investors from actually bringing in fresh capital into the equity market that can support positive performance. So the outlook is that, some of the FX challenges that we are facing in the economy will ease the second half of this year. Thankfully, the federal government of Nigeria is discussing, about raising an Eurobond issuance later this year, and that will go a long way in trying to clear the backlog of FX demand in the economy and also improve liquidity in the FX market. So if we see liquidity improve in the FX market, that's going to encourage more foreign portfolio investors to bring in fresh capital, and that will serve as a positive tailwind for the equity market in the second half of this year. So regarding equity valuation, no doubt, the Nigerian market is very, very cheap. If you look at this from a price to earnings point of view, the PE of the Nigerian market is about 8.5, times compared to peers such as frontier market and emerging market. The Nigerian market is trading at a very, very huge discount. Look at dividend yield as well. And the dividend yield that is obtainable, based on the aggregate index today, it's close to 6%. Meanwhile, if you go outside Nigeria to peers in frontier and emerging markets, you're going to get, just about half of that. So no doubt, the market is very, very cheap. No doubt, corporate fundamentals have been very, very solid. With the major sectors of the market declaring, very resilient, earnings results. But the major drags to the market at the moment is the situation that we have in foreign exchange markets, and we are quite hopeful that in the second half of the year, the CBN is going to step up efforts to solve that particular challenge, and that's going to catalyze sentiments on the local bonds.
Okay. Well, in the financial markets, we witnessed a significant upward reversal in fixed income yields in the first half of the year, with bond yields that are now back up at double digits. Do you expect this momentum to, continue in the second half of the year?
Yeah, thanks for the question. So as you rightly pointed out, last year was an extraordinary where we saw, yields in fixed income markets decline deeply into single digits. But since the beginning of this year, we've seen a significant upward repricing of yields. So on the average, currently, the benchmark bond yield curve is at around 12.5%, and that's more than 2 times, where they were, in December 2020. So we have seen a very, very significant upward repricing in yields in the fixed income market, and we still believe that there are still some upside risks to yields in the near term. Coming from number one, the fact that the Nigerian National Assembly is currently considering approving a supplementary budget that has been passed, that has been forwarded by the executive. So, I mean, based on the supplementary budget, we are going to see additional supply of bonds into the fixed income market the second half of the year. So that potential for higher supply of bonds is a major upside risk to use. Also, regarding liquidity, in July, which we just entered, there are a lot of liquidity events coming from a bond maturity, a number of bond coupon payments, and also NTB and home maturities. But after June, liquidity conditions, in the market should actually be very, very tight, particularly as the Central Bank of Nigeria is currently embarking on an aggressive monetary policy tightening through the use of cash reserve requirements. So based on the liquidity conditions and the prospects for even higher supply of bonds into the fixed income market, it does appear, as if we are going to see, yields further increasing in the second half of the year. But we think that the scope for higher yields it is now much more lower than where they were before, given the fact that we have seen a very, very sharp, upward reversal in the market, and even yields at current level. The long-term inflation rate in Nigeria is about 12%, and now we are seeing fixed income yields, back above 12%. That provides a bit of comfort zone for asset managers, particularly, asset managers that have a long-term mandate like pension funds, to actually pick up interest in fixed income markets once again. So, to a very large extent, just as a summary, we think that there is still a bit of upside risk to use the second half, but the scope for further upward pricing is much more lower than where we were, in the first half of the year. So, our view is that maybe, we have another 100 to 200 basis points, upward movement in yields, and that would be that.
All right, Murtala, we'll leave it there and I will keep tracking the markets. Thank you so much for your time on the program. Murtala Abimbola is the investment analyst with Chapel Hill Denham. Thank you so much. All right, now for opening call to the market, here's Will Ibong. How's it going?
Good morning, Laddie.
Morning.
It's going great this morning. Thank God it's Friday. Well, we see that the equities markets opened the second half of the year slightly negative, on a negative note, signaling the possibility of a rebound due to a positive market breadth. And like Omotola rightly said, the company fundamentals are solid, and the companies are posting resilient first quarter earnings. And let's not be intimidated by what's happening, the slight drop in the market, because a lot is actually happening in the NGX, as it's just received approval for this from the SEC for 7 derivative contracts, and that's the first in West Africa. A derivative, if everyone knows, is a contract that is between 2 or more parties whose value is dependent on an underlying financial asset. Now, away from that and to the numbers now, where we saw that the NGX all-share index slipped by 0.02% to close at 37,898.56 points, as against the 0.71% appreciation recorded in the previous session. Year-to-date loss currently stands at 5.89%. But to give us more insight, to make more sense of what's happening in the market, we have on the line Phil Anegbe, is a research analyst at Cardinal Stone Securities. Good morning, Phil.
Yeah, good morning. Thank you very much.
Thank you for coming on. We've talked about the fundamentals, companies doing well and posting great earnings. Omotala, our guest, mentioned the cement industry, but we have seen some low activities there recently. The counter closed flat for 2 consecutive days. What's going on there?
Yeah, we think there's been largely limited activities there, and the drivers may not be far-fetched. One, so you have big institutions looking in that direction and shunning equities, even though yields have been retreating in recent times. But a lot would also be geared towards cautious stance as companies look to begin to release their H2 numbers, say by the end of July. So we monitor that space closely, but we see a very strong correlation with what is happening to bank placement. Yields are there, are very attractive, and it's taking some alloy away from the equity.
Oh, thank you so much, Phil, for your insights on the program. We're hoping for great things in the market. At the unlisted markets, we'll move over to the unlisted markets, where we see that the NASD Securities Index and the market cap declined yesterday down by 0.15%, despite the uptick that was recorded in the previous session. In addition, the total volume of securities dropped by almost 100%. However, value traded rose by about 45% at 85.74 million naira, and all traded in 45 deals. The share price of the Niger Delta Exploration and Production and the NGX advanced in Wednesday's trading session. Move on to the fixed income market, where the market was bullish as the average yield dropped by 11 basis points to 11.6%. Across the benchmark curve, the average yield declined at the short, mid, and long segments due to high demand. In Treasury bills market, there was some buying interest observed across the curve, particularly on the new one-year Treasury bills issued by the DMO. However, the average yield across the tenors was flat at 6.6%. Meanwhile, the CBN market, we see that the rollover of the CBN market has been, there have been some buys there. The yield is up 10%, and the total number of deals was 12, and the value was at 28.48 billion naira. Meanwhile, at the OMO market, average yield dropped by 1 basis point to 9.9%. We're hoping that the week coming ahead, we get some more good results, as we're expecting more auctions to take place and the CBN and DMO rolling over more maturities. That's what we have for you today.
I will. Thanks for the update. Fingers crossed. See how the session ends today. Thank you so much.
You're welcome, Laddie.
All right, we'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning.
You're welcome back. It's still Business Morning on Channels Television. We head over to London now. Juliana, good morning, and thank God it's Friday.
Good morning. Thank God it's Friday, innit?
Yeah. So Angela Merkel is expected in the UK today, and it will be her last as the Chancellor of Germany. How important is this visit?
It does have its significance, surely. You know, Angela Merkel is arguably the most important, powerful woman in the world. She's been at the helm of Germany, Europe's biggest economy, for over 16 years. She's been obviously back and forth to Britain over 20 times, and she's on her farewell tour, so she'll be saying goodbye to the Queen, Her Majesty, at Windsor Castle later today, and then much later in the evening she will be spending some time with Prime Minister Boris Johnson, actually at his second residence, Chequers, which is just outside of the city. Lots to talk about, really. Apart from saying goodbyes, they'll certainly be talking about post-Brexit relations between London and Berlin, which have always been cordial, and I think both of them, well, certainly for Angela Merkel's legacy anyway, she'll want to keep that intact. And then the big headline, of course, is going to be about the Delta variant and travel. Travel has been a topic of much discussion here in Britain, especially as we're getting closer to the summer holidays. Lots of Brits desperate to get out of the country, but Angela Merkel has been probably one of the sole European voices asking other European nations to put a halt on British travellers coming in to their country without quarantining. According to some press that I read early this morning, Angela Merkel is actually going to soften that tone, which will be good. A lot of people are hoping that perhaps the German Chancellor will give a lasting gift to the British public by saying they can indeed come into Germany without having to quarantine if you have a double vaccination. But yes, it is certainly significant. And a farewell to a very, very powerful, important lady.
Yeah, very powerful indeed. Well, a possible industrial action in the health sector in England over pay raise, and we sure hope it doesn't take place. What's going on with that?
Yeah, this is a massive story, very worrying. I believe there was a one-day strike over pensions by the Medical Association in 2012, but we've never seen anything like a huge industrial strike by the Medical Association since the 1970s. But it's all about the pay rise. Very controversially, Prime Minister Boris Johnson and the Tory government decided that they would increase the Medical Association's pay by just 1%. This has caused absolute outcry. There's lots of talk about clapping for carers and showing your respect for the NHS, and basically everybody's accusing the government of being all mouth and no action. The British Medical Association are asking their staff to accept no more than a 4% pay rise, and if they don't receive that, then they should stop working in any underpaid or overtime employment. That's what they're asking for. The Royal Nursing Society are going much further. They want a 12.5% pay rise, or they will be pushing for industrial action. It is a big, big story. Countless times during Prime Minister's questions, the opposition Labour Party have asked Prime Minister Boris Johnson to go back and reconsider. He's gone back on loads of stuff. Lots of people are hoping that he will do with this one, so it doesn't lead to industrial action, because, you know, the staff, the medical staff are absolutely exhausted, and of course they do deserve to be rewarded for the hard work that they've done in trying to combat COVID-19 and all of the other ailments that, of course, affect human beings here in Britain.
Exactly, and the world at that. I mean, with the threats of Delta variant and all that, we sure hope it doesn't get to that. Well, thank you so much, Juliana. We'll speak to you again at 1:30.
Thank you, Winnie.
So we'll take a peep into crypto market with Laddie Williams. It's normally a red Friday. I don't think I expect anything less.
You don't expect anything less. Okay, let's see. Yeah, you're right. It's red. Bitcoin, 33,344. You know, we always, me and Ini have this thing for Fridays. We always predict it's going to be red, and we have it today with Ethereum all in the red. Most altcoins in red. We just have VChain and Hedera Hashgraph in the green. Well, market cap, $1.35 trillion, down about 4.39% this morning. 24-hour volume traded at the total crypto market. We have 79 $1.03 billion, down 7.96%. Bitcoin dominance inching up at 45.71%. As at 8 a.m., Bitcoin was at 32,989, down 1.96%. 24-hour volume traded in Bitcoin, $33.80 billion. Look at the charts there, the 4-hour chart. We have the price sitting on the lower Bollinger Band there, and the MACD is actually inching into bearish territory this morning. It's oversold at about almost 40 points on the RSI, and the price of Ethereum, $2,037, down 6.19%. 24-hour volume, $25.22 billion traded in Ethereum this morning. Top alts, see all of them all down this morning. Let's bring in Michael and Naji now. Hello, Michael.
Hey, good morning, laddie. Happy Friday.
Good morning, Michael. Thank God it's Friday. Great to have you. Let's look at stable coins. You know, many groups have raised concerns over USDT, but we've not had a tether FOD this year yet. But I see USDT is getting the market share is losing to most stable coins in the market like the USDC and others. What's going on there?
What's going on there is just it's basically just a bunch of risk that's being de-risked by the right parties. So what's happened recently is the United States Federal Reserve has basically they've actually started naming Tether by actual, like they actually are pinpointing Tether rather than calling stable coins. And what they basically said was Tether actually poses a threat to the short-term credit markets as new entrants. They call them the new disruptors to the short-term credit markets because Tether for the longest time said that one Tether was backed with $1 in reserves. And because of the lawsuit with the United States Attorney General, we finally realized that they only had about, I believe, 3% in actual cash and about 10% in like treasury notes and everything else. And they have about 50% of their money in short-term credit notes. And basically, after what happened in 07, 08, with all the short-term credit and all those like short-term credit notes going bad, because when you sell those notes, the yields completely go haywire. Like especially what we saw last year with the junk bonds going to like 60 cents on the dollar. So basically, Tether now is the 7th largest short-term paper, short-term credit. Basically, Tether is now the 7th largest owner of short-term credit in the U.S. commercial paper, which poses a heavy risk for the Fed because effectively, if they do, if their assets on the book go bad, they can pose a huge risk, similar to what Lehman did back in 07, 08. And so it's something for the Fed to monitor. And you're seeing market participants digest that risk and go into more less riskier stable coins like USDC that has partners like Goldman Sachs and Circle, and it just has more transparency. So I think this is good for the ecosystem because, to be frankly honest with you, Tether is a little too opaque for the amount of volume that it moves on a day-to-day basis.
All right. Well, we see Goldman Sachs calling for, JP Morgan Chase actually calling for a $25,000 Bitcoin. And our very own INI right here is calling for $10,000, $15,000 Bitcoin. What do you think?
I think she's right. I think we could see as low as $16,000 to $18,000, but I think that's where most of the pain does stop. But that's later towards the end of the summer. But yes, 100%, 16 to 18K is on the cards. I think at that point, Bitcoin becomes interesting once again for people to have a decent ROI once we go back to 6 figures in about 12 months.
All right. So how should traders be, positioning themselves right now? Do we still trade altcoins? But it seems like alt season is out of the way right now.
Yeah, so the best thing, the best thing I would say is right now, because like the market structure is just negative, I would say the best thing to do is the 140 IQ point move is to be in cash USDT. The second best move is to be in Bitcoin, because you find whenever we're below the moving averages like this, altcoins will bleed heavily. So if you're a longer term investor, you just want to either have your alts in Bitcoin or USDT. And if you're a trader, you're just looking out for opportunities anyways. But for a longer term investor, you wouldn't be you'll be rewarded basically for switching those alts to Bitcoin, and the lower we go.
All right, but which altcoins do you think could, perform even though we're having some kind of bear market?
I think the strongest one so far in this market has definitely been Solana, which is a product out of FTX, the Sam Bankman-Fried. I think his FTX has really just held up amazingly well in terms of being an exchange, and in terms of being strong and having one of the strongest market structures despite us going down. I think Solana, if anyone wants to give them a look, definitely has been one of the strongest in terms of not losing a lot of the gains they've had over the year.
Okay. All right. Michael, always good to have you. Thank you so much.
Always a pleasure, laddie. Thank you so much, and have a good rest of the weekend.
You too. All right, and it seems you might have that your 15K Bitcoin. Who knows?
Well, I'll just keep my fingers crossed. Who knows? I might just, step into the market when the price goes down.
Let's see.
All right, well, that's it for the week. Thank you so much for being a part of Business Morning all through the week. It's been a pleasure having you there. I'm Ini John Mekwa, but don't forget at 1:30, Business Incorporated will be up with updates from the business world. Do join us then. I'm Ini John Mekwa.
And I'm Ladi Williams. Have a great weekend. Thank you.